Will your money disappear where you least expect it? Today's financial shifts signal potential chaos and opportunity. Let's first delve into the unsettling news about Anthropic's CEO visiting the White House, a development that's shaking up the AI sector and consequently impacting investor sentiment. Anthropic, an AI company recently blacklisted due to its controversial practices, now finds its CEO at the steps of power, potentially influencing policy on AI regulation and ethical standards. This visit could herald a shift in the regulatory environment, creating a ripple effect across tech stocks and AI investments. For investors, this raises questions about how policies may evolve and what they mean for the future of AI companies in the stock market. The backdrop of heightened scrutiny could make or break potential gains in your tech portfolio. While tech and AI face their challenges, the auto industry is reeling under its own weight, specifically with Ford's recall of up to 1.39 million F-150s. This recall, predominantly hitting models from recent years, could bear severe financial repercussions for Ford, considering the costs involved in handling such mass recalls. Impacts on Ford's stock could easily spill over into the broader U.S. stock market, particularly affecting portfolios heavily weighted in auto manufacturing. The potential loss of consumer confidence and subsequent profit dips could drag down related stocks, making this an area of concern for investors relying on stability in traditional sectors. On to streaming services. Netflix's shares have tumbled significantly after the announcement that co-founder Reed Hastings is stepping away. As Netflix catches its breath during this transition, questions loom over its strategic direction and leadership effectiveness without one of its founding pillars. The streaming giant has faced increasing competition, and any perceived instability could lead to further stock depreciation, posing a risk for those heavily invested in entertainment equities. This turbulence makes an intriguing parallel to the opportunities AI investments might present, hinting that investors must stay vigilant to industry shifts and leadership changes that can dramatically affect market standing. The scrutiny over prediction markets has caught many traders off guard as Washington intensifies its focus. Prediction markets, platforms where users bet on the occurrence of future events, have operated largely in a regulatory gray area. However, increasing governmental oversight could tighten regulations and hamper market operations, leading to a potential retraction in crypto price speculation and contractual legality. With many of these platforms utilizing cryptocurrencies for transactions, regulatory changes could influence Bitcoin and Ethereum markets, magnifying today's observed declines and impacting trader confidence. This brings us seamlessly into the cryptocurrency domain, where Bitcoin and Ethereum appear to be riding the waves of volatility amidst these broader market developments. Bitcoin at $75,896.32 and Ethereum at $2316.22 are both encountering downward pressures of 1.6% and 2.51% respectively. As the crypto market faces increasing regulatory discourse, investor perception plays a pivotal role in dictating price movement and stability. Uncertainty in related sectors like prediction markets and regulation of digital assets introduces additional elements of risk and speculation. At this juncture, one must question the intertwining fates of tech, AI, and crypto markets, particularly as regulatory and consumer confidence challenges threaten to erase gains. Could the rise of AI regulations signal a strategic pivot for investors away from traditional tech-heavy portfolios and towards more diversified ventures, utilizing both? Before we answer this crucial question, think about this. If AI's regulatory environment tightens and intertwines significantly with crypto laws, will we see traditional investment strategies falter, or will there be emerging avenues of new wealth in sectors we haven't even considered? These crossover impacts call for a strategic reflection. In conclusion, today's headlines reveal a complex puzzle for investors, balancing the fine line between fear and opportunity. Whether you're watching the regulatory landscape change for AI and crypto, or contemplating the residual effects of significant corporate shifts, such as those at Ford and Netflix, staying informed and adaptable is paramount. It's crucial for investors to analyze whether specific market reactions are temporary or indicative of long-term shifts. Today's events call for a reassessment of your portfolio's exposure to volatile sectors under potential regulatory burdens. With insights into both current trends and future forecasts, you are in a better position to optimize your investments for potential gains. Remember to subscribe to stay updated on how you can navigate this ever-changing financial landscape. Let's unpack more of this tomorrow with deeper insights and ways to safeguard your investments against upcoming challenges. In the meantime, let's delve into some strategies that can help you maintain stability and even seize opportunities amidst the turbulent times. First, diversification remains a pillar of robust investment strategy. While it might sound like old news, the truth is, diversification is your defense line against market volatility. The key is to diversify not just across industries, but also across asset classes, regions, and even risk profiles. For instance, while technology and growth stocks have been front and center in many portfolios, it's worth considering more stable sectors like utilities or consumer staples, which tend to fare better in uncertain times. Furthermore, one cannot overlook the increasing importance of sustainable investing. As more investors pivot towards ESG, environmental, social, and governance criteria, you would be wise to evaluate whether your current investments align with these principles. The rationale here is twofold. Not only does this align with the shifting ethical paradigms, but it also positions your portfolio to capture emerging market valuations driven by this significant shift. Companies that are frequently scorched by regulatory scrutiny often find themselves at the receiving end of market backlash. On the other hand, those that champion sustainability often enjoy reduced regulatory risks and an enhanced corporate reputation, thereby safeguarding your investments. Now, regarding the allure of cryptocurrency investments in this rapidly digitizing world, while they might present lucrative opportunities, they are equally laced with uncertainties, largely because of their speculative nature and evolving regulations. It's imperative to allocate only a small fraction of your investments to cryptos until clearer regulatory frameworks are established. In parallel, keep a vigilant eye on advancements in blockchain technology, which underpin these digital currencies, as they present promising applications far beyond mere currency exchange. Moreover, the approach towards AI-related investments should be forward-thinking, yet carefully calculated. As AI continues to revolutionize industries, the potential return on investments in leading AI companies or funds could be substantial. However, due to its disruptive nature, it's equally crucial to monitor the ethical implications and regulatory trends impacting AI development. Consider supporting companies. Lastly, stay informed by continuously educating yourself. Subscribe to newsletters, read financial journals, and perhaps most importantly, tune in to credible financial advisory platforms. Staying ahead of the curve often means being equipped with knowledge before it becomes mainstream. This proactive learning approach can often put you one step ahead, allowing you to make informed decisions rather than reactive ones. In conclusion, the essence of making it through these challenging times lies in a balanced approach. Constant reevaluation of your portfolio, diligent research, and awareness of wider socioeconomic paradigms are your greatest allies. As we forge ahead into uncharted territories, these strategies will keep you grounded while allowing you to capitalize on new growth areas. So, keep a watchful eye, stay nimble, and remember, every market upheaval harbors a unique chance to refine and adapt your investment strategy, turning challenges into golden opportunities. This is not financial advice. If you enjoyed this video, please subscribe to the channel and check the links in the first comment below.